Hey, good afternoon, everyone. This is Sam, and I'll be doing the free nightly video for May 18th, 2020. All right, let's go ahead and dive in. We're going to be looking at two things today, guys. Two things that I think can drive really the entire market. The first of which is going to be SPY, which is effectively the entire market. And then we're going to be looking at volatility. And if we can combine those two different things, we can get a decent read on what most things are going to do by understanding the index as well as understanding the volatility profile of the things that we are in. So let's go ahead and dive in here with SPY. On SPY here, what I'm seeing is a pretty well-defined range, roughly from about 279 to about 293. You can see all the choppy price action here. You even have a little bit of a bear trap with that wick. If you think about the psychology of anyone who would have shorted at that level or anyone who would have gotten stopped out, when the day closes at the highs and then gaps up, it puts them in a bad spot, right? If they're short, they're in a bad spot. If they got stopped out of their long, now they wish they had it and might be chasing it. So that kind of psychology can create these huge moves to the upside. What I'm seeing here in SPY on the daily is a squeeze. It's starting to expand to the upside, so it fits in line with what you're seeing on the chart. Momentum indicators crossing right at the midpoint, which is as good as it gets in terms of positive momentum structure. And this indicator is also crossing positively while maintaining the center line. So that bodes well too. The target, short-term target on SPY for this little swing here, just measuring this swing symmetrically, gives you a target of roughly 297.44, which lines up very nicely with the 100-period simple moving average. So that is short-term what I'm looking at, but most things keep lining up right at that 300 level, which comes across as 3,000 on SPX. So you got to get through this zone of resistance, right? You can't just discount it. 297.44 to about 299 is major resistance. So you got to get through that. Be very aware that that is resistance, but the setup underneath the market does look good for continuation. So the index looks good to me. If it gets above 297.44, it's got a little bit more room. If we then look at VIX or volatility as a complement to the SPY, keep in mind as the SPY goes up, usually volatility or VIX will come down. And the best setups happen when you get both, right? You want to have a bearish setup on VIX and a bullish setup on the index so that you can have the highest probability trades. So if we look at VIX here, it doesn't have anything going for it that I see. You're not even back at this low support, right? So there is support on VIX somewhere between 26 to 27, basically in this zone. You're not back at that zone. You're below the 8, right? You see the 8 there. You see the 21 here. You've been rejected at the 21 multiple times. You can't see that one. There's one. Here's another one. So you're being rejected at the 21 in a trending down structure, right? So the VIX does have a bearish structure to confirm with what we're seeing on the SPY chart. By what I'm seeing here, VIX is going to be continue to be a sold every time it retests the 21 EMA on the daily. What this indicator down here is telling you, when both lines are below the center and the red is above the yellow, this is the most bearish orientation you can have on this indicator. And basically what it translates to is that any kickback or any retracement back to the 21 on the daily is a sell. If that is the case, that bodes well for equities as well, because that would mean that VIX or volatility remains in a downtrend short term. Probably will test this 26 to 27 level. But in reality, what I'm looking for is for it to test down here 26, get a small bounce, probably fail, come down here, test the 200, which is closer to 24, get a small bounce, probably fail, and then all eyes are down here on 20 on VIX. So if VIX does go from roughly right now 29 to 20, and you have to give it some time, nothing happens in a straight line. But if it does go from 29 to 20, that's going to be a big pop in the stock market. So you have a bullish setup on the index, which is SPY, and then you have an equally bearish setup on the VIX, which is volatility. When those two things work together, you get the best setups. So I like pretty much anything in the market. Pretty much the indices look good. SPY looks good. QQQ looks good. IWM even is starting to participate. So when you have a setup in the SPY and a corresponding setup in the VIX, you can almost throw a dart and hit. So that is the best setup that you can have. If you want to play just directly, just play it through the SPY, and that would be a decent way to do it. All right, guys. Hope this was helpful, and we'll see you for the next one. Cheers.